All right, so today we're going to at least start to talk about swing trading again. Review some of the key things we spoke about regarding sweeper activity, the orders specifically. What's the best type of action we want to choose from, and it's kind of like stock picking from a pile of quality action, right? That's generally what we're looking to do. And I'm going to try what I'm looking to do here is I'm looking to, like we did for intraday trading the last time we met. I want to talk about how sentiment and positioning can play a big part in swing trading. Okay. And unlike intraday trading, it gets a little trickier with swing trading, with sentiment. And I'll explain to you why, because anything in this game is a lot easier said than done. But we'll go over why I feel that. Okay. And we'll see if we have enough time. Hopefully we tackle all of it. Otherwise, we'll just continue again next week. All right, we'll just leave off where we were and we'll continue on the swing trading. And you're going to see, as long as we have courses left, I'm going to keep trying to go back to certain things for us to review. So you make sure everybody's got a handle on what they need to know. All right, let me just shut this TV so I don't get any. Heat is disgusting out there. All right. No, that's why I try to keep the dogs out of here today. So we got some peace and quiet. All right. So what we were, let's pull up some of the orders here too, just so we could go over. All right. So we were talking about what made the makeup of a quality sweep. Okay. And unlike for intraday purposes where we're just looking for momentum to be ignited in a sense, right? That's all we're looking for on an intraday basis. With swing trading, depending on your time frame, and a lot of you probably fit into this category, just momentum is not going to cut it. All right. The momentum, more often than not, depending on market conditions, can give you a little bit of a cushion. Okay, a lot of times you'll realize that, some of the top action you'll get in, find an entry that day, and the action is strong enough that the stock will react intraday and possibly follow through the next day or so. Okay, but if there's not enough momentum to carry beyond that, now the difference is you're relying on the actual bet to click. Right now, not only are you placing a bet that sweep is going to generate momentum, enough momentum for you to get a trade out of, you're also betting that whoever the individual or fund is buying those calls or puts, them being right. Okay. And that right there is the big difference in why there's more risk, obviously, for swing trading, off anything for that matter, let alone flow. Okay. I don't think people realize that when you're trading intraday off this stuff, or even really tactically, okay, you do not need that player to be right on his bet. Okay. As a matter of fact, you shouldn't even concern yourself with that when you're playing over the extreme short term. Right. And you guys will start to realize a lot of the top action, once you get a knack for, from choosing just from the cream of the crop out there, you're going to realize, and this is something that frustrates me and also created some bad habits in where I'm quick to pull the trigger. We were talking about this today in the steam room. You're going to realize that a lot of the top action out there, you're going to have a profitable trade. Okay, I'm not talking about a scalp either, a 10-minute scalp. You're going to have enough momentum, okay, again, over the course of that day, possibly a follow through the next day, next 2 days, whatever it may be. You're going to have a trade there. Okay, a lot of times you're going to be profitable. You're going to be in the green, and it's going to be something that you contemplate taking. You know, the swing trade aspect of that, or building positions, I should say, you're looking for more than that. And what you're deciding to do is you're deciding to risk the short-term gains that I just mentioned you're likely to see on a lot of the plays you get involved in, off top action. You're risking those short-term gains for obviously a larger reward, right? So you're taking an added risk, but you're also looking for the larger reward, okay? And, you know, again, this is something we discussed today. There's a lot of luck in that. There's a lot of luck in that because you're not playing every single top bet, right? We're all picking and choosing. Do we like the name? Do we like the spot? Right? I have bad blood with that name. I never made money in that name. You know, there's a bias, even if you think you're not having any bias involved because you're trading off flow and the top action out there. There's still an element where you're picking and choosing what you're going to play. All right, so you got to understand that there's also a lot of luck and randomness involved in that. Okay, the good thing is, and you know, I can make this statement because I've been watching it long enough. If you continue to swing trade and position trade off the best action, and here it is again, like everything else we discuss and you need to acknowledge in this game, otherwise you have no shot. You properly manage your bankroll, right? I'm more than convinced that in big picture, the long run, you're going to be well in the green. You're going to have a lot more winners than losers, right? But the randomness and the luck that's involved, there are going to be losers. You know, there's just too many things involved for there not to be, right? You got the market as well, outside events that you don't control. So no matter what I'm getting at is I want you guys to understand that no matter what system you're playing, no matter how great of a strategy you have, you know, there's always going to be that added risk when you're trying to catch that larger move by holding longer. All right, there's always that added risk that you have no control over, no matter what you discover in this game, no matter what you come up with. All right, but on that note, okay, we already discussed, you know, the top action out there, right? Right, it's called reality, exactly. But you know, a lot of times people they know, right? They know they have to lose, but losers can throw them off whack significantly. You know what I mean? They become overconsumed, you know, with the one loser. And, you know, I see it time and time again, not even that they lost money net, but they'll forget the two winners they just had, and they continue to harp on the one stock that may not be working out, you know? And in reality, that just may be your loser, right? If you just cashed a couple tickets, this may be your loser. And you cannot force the situation. You cannot try to force that into a winner. That's where you run down this, you get down this slippery slope in this game where you get into trouble. When you try to force losers into winners, oh, I should have done this, or, maybe if I didn't do that, or, you start looking for excuses, okay, to prevent losing in the future. But in reality, you're not going to be able to prevent anything. You know what I mean? You're not going to be able to prevent anything. You're going to lose. There's no question about it. And like I said, I know everybody knows that. If I ask each and every one of you or anybody on Twitter, everybody understands they can't hit, they can't cash every ticket, every bet they place, especially in options. It's just not realistic. But I guarantee you the same people who agree with that statement will still harp on a loser and get stressed out and frustrated with the stock or the calls that currently are not performing the way they wanted to or expected. So that being said, once you understand that in this game, you start to see the light, period. Okay. But once you understand that, you swallow that pill, you acknowledge it, and you start to look at flow for what it is and sweeper activity for the edge it can provide. That's when I think, your outlook in this game gets to another level. Because initially, I think just like everything else, people hear top bets and they hear an edge and sweeper activity and they expect, unicorns and rainbows and magic. Okay. And in reality, it's not. And what you got to understand too, and this is what I was trying to get to, is that even the players who are placing these bets as aggressive and as much conviction as they have, they lose. They lose. Right? And if I'm stressing to you that this action's worth following because they have access to a lot more information, a lot more knowledge than we do in this game, okay, they still lose. Okay. And I think that's the most important thing when it comes to swing trading. Okay. I think that's the most important thing. All right. And what you want to try to do, again, not just off anything you may be doing on this holding overnight, swing trading, position trading, whatever it may be. Okay. Just swallow the pill, understand that you're going to be losers, no matter how strict of a system, no matter how disciplined you are. Okay. That's part of being disciplined. You're going to have losers. All right. Now, that being said, the top sweeper activity, the top flow, okay, we spoke about is, in a sense, accumulation, right? When, again, one of these professionals, players, funds start to aggressively accumulate calls in a name. Okay, we went over that, right? That's the top activity for swing trading and position trading purposes. Okay, that's for the most part, when you're using just flow. If you're just using sweeper activity for swing trading purposes and nothing else, that's generally what you want to focus on. Okay, because one order can mean anything, right? And what we're trying to, our ultimate goal by staring at the flow all day long, right? Staring at sweeper activity all day long, is for that type of action where that appetite, that unquenchable thirst, where they continue to come back and want more and more and more. All right. So we know that's the top type of action out there. Okay. Sentiment, when used in addition to playing the top activity out there, can be deadly as far as a win-loss or a hit ratio. Okay, so in other words, bumps the probability that you're going to cash a ticket and not have the loser we just spoke about, in my opinion, dramatically. The problem with that is, okay, you're probably saying, well, all right, so let's go. That's all I'll play. The problem is it's easier said than done because there's so much in between a buy and sell signal for sentiment. There's so much time, there's so much flow, there's so much up and down in price action that it's not easy to sit around and wait for just bullish sentiment signals, and that's all you're going to play. Okay, realistically. And I'm sure a lot of you can admit that to yourself. All right. I will tell you without a doubt in my mind that if you told me, listen, I really don't want to lose, how could I avoid it as much as possible? And I want to be extremely selective. That's what I would tell you. You wait for favorable sentiment, bullish sentiment, and you watch, you pick from the top order flow out there into that sentiment. And not only are the most winners generated from that setup, but some of the biggest winners are because you're coming from bullish sentiment, right? So makes sense. All right. But like I said, the in-between. So in other words, like right now, you wouldn't be buying anything. Okay. You wouldn't be trading anything. All right. As a matter of fact, maybe how many times over the course of the last couple months you would have found something to play off bullish sentiment. So there's a lot of in between. You can manage your money accordingly. You can size accordingly. Okay. But I told you guys before the whole course start that what I call the sweet spot in a sense, right? The sweet spot, the fat pitch, that's where aggressive sweeper activity meets bullish sentiment. That's the fat pitch. That's the sweet spot. Okay, that's where all the stars align. And not only, are you catching those turns and reversals in the market, what's happening, you catch a lot of times the start of major trends, right? So, we mentioned this on prior webinars. What I mean by that is, like if you look a lot of times where bullish sentiment over different time frames, where they were signaled, right? You'll see start of major trends, major trends. Like obviously we had off the COVID bottom, you don't need me to tell you what kind of trend that started, right? We had another pretty strong signal prior to the election off sentiment. That was another huge platform for a big move, right? Recently, okay, so what I mean by that is this. Okay, so, and understanding your time frames are important, right? And we're going to make sure we all understand that, right? Yesterday, we focused on the squeezometer and the anti-VIX, right? Those two, for intraday purposes, that's all we want to know. That's all. If you're just day trading, no reason to put too much thought into anything else as far as sentiment's concerned. Okay, that's for day trading. For tactical swing trades, which I think the majority of you fall into that category, it would be this, right? So the point I'm making is the action you're playing off of, the top action you're playing off of into this or off this signal, okay, a lot of times are not only going to be winners, right? Because you're catching the market momentum change a lot of times right there and then, but nice winners, right? Big moves. So think about any name that caught your eye, that saw action into or off this bullish signal. You know, they're probably some of the biggest winners we're seeing out there, right? One comes to mind, I see the Roku, which, a lot of you loved, right? They're always, because they're the first to get hit. They're the first to launch. And then it starts to trickle down, right? They decided to hit this go around. We were talking about the stud growth and software names, right? Those were the initial names that you started to hit up. Even some big tech or whatever. You see some of the moves out there, right? As opposed to when you're playing, this is not even as bad, but let's just say over here or even over here, right? Because a lot of times the market, not only, reversals to the downside and sell-offs, but the market itself, a lot of times, especially longer in the tooth as far as a major trend is concerned, right? I mean, we're rallying from the freaking COVID bottoms. You want to call the election a quote unquote correction? Let's call it that. All right. We've been rallying since November. So this rally has been long in the tooth, right? So here things are going to get tired, right? And what a lot of people have a tendency in doing, me too, is you look at the winners from here and you're hoping these winners become those. You know what I mean? You're hoping they have a very similar reaction. It's possible, but the likelihood is, more than that, it's not. You understand? It's not. So when you hear me talk about the sweet spot, fat pitch, the strongest signal out there is when you get favorable sentiment like this and you see, aggressive action. A lot of times it doesn't even need to be exceptional action when you have sentiment with it. A lot of times just anything they're buying aggressively will perform well. Okay, where up here, a lot of times, even some of the top action, you'll get a follow through the next day and boop, they fall on their face right back to where they started, if not a little worse, right? So that's what I mean by the sweet spot. Now, like I just mentioned, and I see, who was it? Dutt, I think he just mentioned it, right? You got two signals here, okay? Which I know my degenerate ass can't just sit around waiting for that. You guys could sit around and just wait for that? You know what I mean? It's tough, right? Okay, and I know, right, a lot of you, I know Matt, I know a lot of you who've been in the room and looking at these signals, for each and every month that goes by. We all know the strength behind these sentiment signals. It's just, there's a lot of in between, man. There's a lot of in between, because it's not like when we're over here that there aren't any winners out there. There are winners out there. You understand? There's definitely winners out there. So it's worth playing. It's worth participating. You just got to understand that, it's not going to be as easy as it was coming off this. You know what I mean? It's just not. You know, it's going to be less participation, right? Breath starts to dry up. We're seeing that now in the market. All right, so we have to understand that, right? The reason why I'm talking about this stuff and even sounding repetitive is we have to understand that. Why do we have to understand that? Because maybe, you know, maybe here are the spots, right? We want to really play, right? Get maybe a little more aggressive. And then everything else, we're going to play, but we're just, you know what I mean? We're going to tone it down a bit. Without a well said, Lewis. Well said. That's exactly what I was trying to get at, you know? And, you know, like I say, I'm telling you, it's still worth playing. Okay. With degenerates, we got to admit it, and it's worth playing. Okay. Because if we do what we're supposed to do, we're not going to get beat up. You know what I mean? We're not going to beat up. If we're playing off top action and you're money managing properly and you're not chasing names that have gone up in the straight line, you know, the whole 9 yards. If you're playing smart here, okay, it's not going to be as easy, obviously, but you got a chance to make money. You got a chance to make money. It just gets tougher. All right, but these are the sweet spots. Okay, these are the sweet spots. What's been very frustrating, and Lewis can vouch for this because Lewis and I have been complaining over the years about it. The market's been getting quicker and quicker and quicker each and every signal we see. In other words, these things fly now. You know what I mean? You blink and these things already have started to rally. Yeah, like they gap up, right? So in other words, what Matt's saying, you get this, and then you got a gap the next morning, and you got to chase the gap. Okay? But what we want to understand and what we want to realize is when we get this, okay, once we get this, we know now, right, that we have sentiment on our side, and we can, even if it's intraday and we're into green, we could get aggressive if we see sweepers active because we know what these things can lead to. You know, very rarely does the market gap up out of this and just stop and drop dead. Right? We spoke about that yesterday. When that happens, that's a sign that the environment's changing. Right? So if we see that, we take our loss and we put our guns back in the holster and we just watch. But we know once we come off a signal like this, all right, the aggressive buying that's coming in, it's got a chance to have some real legs to it. All right, so even if we're not catching the signal like we would like exactly, right? Sometimes you can buy, like you get this, you can buy into the close something just in case that gap up annoys you, you know, and then add if you do get weakness. But generally, when we're here, we're going to find a lot more success as sentiment moves up, right? And people get more bullish, as opposed to here, wherever it goes. Things get trickier. All right. So that's, and this is tactically now, right? So there's a lot of time frame involved to sentiment, okay, that I want to make sure everybody gets a grasp on, all right? So we got intraday we spoke about yesterday, okay? Today, we're talking about just for swing trading purposes, right? So this is one we obviously want to keep an eye on, okay? And look for favorable sentiment, as opposed to when things get up here, the more they're up there, it gets a lot trickier, Okay. In this market, right, in this climate, especially what we've been focusing on, I thought I just posted it. Oh. Okay. We've been looking at this a lot. Okay. And this, because of the market we're in, not only has this been a lot more useful, but there's been a lot more meat to this, meaning that your normal market, a lot of the risk on groups will move together. Right? So you'll have the semiconductors, technology, consumer discretionary, industrials, a lot of them will move up and down together. Now in this market with rotation, as crazy as it's been, you got different sectors on different planets. So everyone see the market was set up for a squeeze. The market was set for a squeeze Friday after FOMC. I'm trying to remember, Lewis. I got to remember. Let me think about that. Let me remember. I don't know what the hell I saw that, no, not for a squeeze. I don't know, Lewis, that's a good question. I got to try to figure that out myself. The market was set up for a squeeze Friday. Let me think about that, Lewis. That was quad witch Friday, right? I was pretty confident about it. I don't know. Yeah, I'll definitely give that some thought. I got to put some thought into that just to remember where last week was. I don't remember 5 minutes ago. All right. So we talked about this a lot. A lot of you guys understand how we use this stuff, right? But we're talking about here and in sentiment general risk reward, right? That's what we're talking about. Forget buy and sell signals, right? We like to talk in those terms. But again, you get into trouble when you look at it like that. Risk reward, that's generally how we want to look at it. Okay. So when we're buying financials off of here, okay, we have risk, but we have a lot more reward, right? And probably have less risk, obviously, than if we were buying up here. All right, we could still be early. Okay, this is not some crystal bullshit that is going to signal to all banks start going higher. All right, I mean, it's the market. But generally, when you're looking here for entries, okay, not only do you have less downside risk a lot of times, but the reward's worth it. The reward's worth it. Okay, why? Because here, right, you get that grind up, and you're waiting for the rug to get pulled. You don't know when it's coming, but it's coming, right? I mean, this is XLF. There's not a lot of movement here, but you know what I'm generally saying, right? So you get this. All right, so let's say you're buying this breakout. It's a breakout, everybody. Buy the breakout. But we're looking at sentiment and the risk reward showing that it's poor. Okay. But you want to buy it anyway because it looks super bullish and we're still seeing bank flow and it's a breakout. Okay. This is what has a tendency of happening. Okay. Over here, you're up, you're feeling good. You made the right move, came down, reversed, still strong, nice bull flag, right? Making yourself feel good. And then, here it comes. Okay, and this is the risk of buying into a poor risk reward as far as sentiment is concerned. You know what I mean? That's the risk. Now, again, I know I don't want to sound childish like I'm talking to people who never traded before, but I want everybody to understand, just cause it's telling us there's a favorable risk reward doesn't mean that there's no shot of whatever bank you're buying, you're going to lose money. It doesn't mean that. But what it means is that if you want to buy the banks, you understand? It's worth it. The upside is worth it. Here, you were taking the risk, and what sentiment was telling you was it's not even worth it. Okay, yeah, you might get lucky and make money, but the risk of this is not worth it, right? The upside that you may see, the little more upside you may see, is not worth this risk. Okay, so that's the way, I got myself to look at sentiment a lot of times, rather than buy sell signals, because when you use buy sell signals, a lot of time we have a tendency, we want to see instant results, right? So you get a buy signal, I don't know, in the industrials, and you got to see a bounce that next day. And that's not what it is, obviously. All right, so you want to, again, risk reward terms, right? And it's easy enough to understand, right? Green line, good risk reward, red line, poor risk reward. At first glance, even if you just look at, oh shit, you know what? Citibank is catching flow. Wow, we got some favorable sentiment. You know what? I wanted to buy Citibank. I'm going to tell some Citibank off that action. Okay. That's the approach. Or like we've been talking with energy, right? Energy, God, goes up every day. They're never going to come down, these things. They're never going to come down. But you look at this, and this is like a reminder, right? A slap upside the head. All right, I got to sit tight. I like energy, but I got to sit tight, right? It's not pulling yet, may not pull tomorrow, the next day, but there's got to be a breather here that if I still like it at that point, will be an opportunity. Okay, so that's the general approach. Anybody have any questions? I know a lot of you understand this, especially those of you who have been around, but I know I get a lot of questions on it on the regular webinar, so I want to make sure. Sentiment Trader has a lot of this stuff. But at the end, I'll give you everything where you can get it and stuff. The ones you can get anyway. All right. And when you're looking at this, there's sentiment all over the place, right? We see sentiment charts all over the place. There could be one sentiment chart that somebody flashes on Twitter that shows the complete opposite of what we're looking at, right? So if you're not a member of the Steam Room, right, and you're looking at all the sentiment around you that you get outside of the Steam Room, right? You want to take a consensus view type approach, right? You want to factor it all into the equation if you're doing it outside the Steam Room. The beauty of the Steam Room is I'm basically doing that for you, right? Like a lot of other things with flow, I'm doing the same thing with sentiment. So I can point out to you, what you may or may not be interested in. Okay. Another issue here, right? Because the market's not perfect. You're going to have names that don't, especially now, that don't fit into any of this shit. Right? There are so many names, more than ever for me, that I don't know what sector they're in. Right? I think they're tech, then they're a bank, then they're this. I don't know what the hell they are. All right, so that's the tricky part, right? The market's not perfect. The market's not perfect. There's nothing you can do about that. There's nothing you can do about it. All right, so if you want to make a bet off sentiment, you want to play something you're sure of, right? So if you can play the financials, make sure you're playing XLF, FAS, Citigroup, Bank of America, JP Morgan. All right. Don't try to get cute and buy Hampton National Bank or some shit like that. Right? If you're going to make a play on sentiment. All right. And a lot of times the more active names, right, of the group, we see action in. Right? We all know energy names, the names we see action in, right? Biotech, shit like that, semis. But it's not perfect, just like everything else is not perfect. All right, but understanding just the general premise here will help a lot. Will help a lot. Another thing I love to look at that hasn't been a factor since November is when the majority of these risk-on sectors are all flashing solid risk reward. That tells you a lot about the setup in the overall market. You know what I mean? So when you have financials, tech, semiconductors, consumer discretionary, housing, whatever it may be, all flashing bullish signals, right? That tells you that the backdrop for the overall market is pretty solid as well. And on the flip side, okay, again, we haven't had that because of this rotation and how aggressive it's been since the pre-election. We haven't had that. All right. And on the flip side, when you're seeing all mostly risk-on sectors all at sell or poor risk reward, I should say. Again, it tells you a lot about the setup for the broader market. All right. So, as I mentioned at the start of the course, you may not trade sectors. You may just swing trade ES or SPX options, right? A lot of you prior to the course mentioned that's what you do. And can there be anything out of sentiment you could take? Even out of sector sentiment, there's something, a signal there for you to look for. Even at sector sentiment without playing individual sectors and names. All right, and the last time, can I see it on this chart? Where do you guys think the election is on this chart? Is it this here? 20. What year are we in? Oh my God. What year are we in? 21, right? Jesus Christ. I don't know what year we're in. It's got to be this year, probably. That's what it's got to be. Right? That's got to be it. Yeah, that looks like it's it. Some close, you know, but most of them there. But you see what I mean? You know, so if we're going to get there again. We're going to get a market where there's going to be more correlation. It's just nuts right now, you know? But, you know, that's a strong signal. And that a lot of times will line up with other signals we look for on a more intermediate term time horizon. We'll get there. We'll get there. You got to understand this market, when you don't get corrections, this is what happens. You understand? All the corrections happen under the hood. Oh, there we go. Awesome. There we go. Oh, yeah. Hussein's money like that. Yep. Hussein's money. So when you don't get corrections, fish, that's the problem. You understand? They go under the hood and they do it sector by sector. That's what they do. All right, so everybody understands the general premise, okay? I mean, if you wanted to, like, if you want to play raw sentiment, right? If you just want to play raw sentiment, okay, you don't even need to play names, okay? If you're not comfortable, you don't need to play names. If you want to really narrow the odds down for you to benefit off a sentiment squeeze, what you're looking to do is make a bet on the overall market off bullish sentiment signals and benefit from that. Okay, what a lot of us like to do is play the action in names that come in. Okay, and a lot of times you'll get, the Facebooks of the world, the names, a lot of names you guys like to trade. And think about that too, right? We talk about with flow, like here's an example of it, okay? Like Facebook. Like, what are we gonna do with Facebook sweeper activity up here now? You know what I mean? Like there's not much edge left there, guys. There's not much edge left. Why? Because they've been sweeping up this Facebook, there's sweepers every day in it. Every day. Or even a better example, AMD, right? Every day. So if AMD was a name that you were really interested in, right, ideally off favorable sentiment would have been a sweet spot. A sweet spot. And the other thing too, what I wanted to talk about, again, I'm just thinking of myself, like issues I have and had over the years. We always want to buy something. You know what I mean? We always want to buy something. Like every time we come in, we fire up the machines, we want to buy. And, outside of intraday, because we can get bullish signals intraday, for swing trades, you want to crack that habit. You really want to crack that habit. You want to buy early, right? Off sentiment early. And then what we're supposed to do that we don't do, especially me, is hold. You know what I mean? Not buy, right? Like I see what a lot of guys in the room like to do is they'll play Roku, right? And they'll nail the spot on Roku. And then they're trading it again, $30 higher. Right? And now if you're going to take a loser that's going to wipe out your winner off the sweet spot, think about how idiotic that is, right? Like how are you going to find consistency doing that? And if you think of it logically, it doesn't even make sense, right? It doesn't even make sense. Right? Again, bro, let's say you're buying AMD in here, okay, and then you're selling it here, and now you're finding entries up here again and weighing them the same. So in other words, if this is a loser, it wipes out this winner. You can't do that. You can't do that. That's why, what I've not mechanically, not to a T, but generally what I like to do, okay, is because this is more tactical, right? When we're coming off this, I get a little, I get a little more aggressive. And then, as we get here, solely day trading, maybe I decide to hold a name a little longer here and there, but I'm not holding everything. The majority of stuff I'm day trading. So if I do get caught or stuck, I'm not wiping out this. Make sense? So that's generally how I approach it. You know, and again, it's a lot more difficult and confusing now because of the rotation out there, right? Because a lot of times, like for example, you might have this, okay, but growth what it just did, right? So growth is not flashing a bullish sentiment signal. You know, so we got to use our noodle a little bit. We got to use our noodle a little bit. Meaning that, you know, if we do get a buy signal, you know, we can't just assume that growth that just went up for 2 straight weeks, it applies to that as well. You know, it could be the reverse for that. You know, so even though it's a little trickier, it's a little more confusing, it helps. Imagine, I don't know about you guys, but imagine not looking at this stuff. You know what I mean? In this type of market right now. I'd pull my hair out of my head. I wouldn't know what the hell to look at. You know, I wouldn't know what the hell to look at. So it gets, you know, like I said, this environment's a little trickier and it will improve at some point, but, you know, even more to pay attention to this stuff even more closely at times. All right. So does everybody understand generally the whole thesis on the sentiment side, right? And I know most of you do, but it again doesn't have to be you risking a lot of money. Stuff like I told you with the intraday for you swing traders, like I mentioned yesterday for intraday, those who day trade start looking at that, the anti-VIX and that stuff. Start paying attention before you push buttons and see with your own eyes, right? See with your own eyes. All right, because again, I sound repetitive, but it's not like basic materials, okay? This is not a guarantee that basic materials is going to bottom right here and go straight to overheated. Okay, but what it's telling you is if you were interested in basic materials, if that was a group you were looking to play, right? But you saw this and you did the right thing and stayed patient and waited for this, now you start looking. Now you start looking, right? If you have no interest in basic materials, you couldn't give a shit, it's not even on your radar, then who cares? Don't even look at it. Right? Or even financials, right? I'm sure people were licking their chops up here. If you were and made the smart move and waiting for a rinse, and also start applying it when you're doing your stock selection, the stock picking. When you start looking at names and groups, start paying attention to it. All right, and if you're playing the overall market, same thing I mentioned, right? If you're swing trading the overall market, okay, and you don't need exacts, okay, if you're using other things, right? If the S&P 500 is at a crucial Fibonacci level that you swear by and have made money in the past with, right? And you get this, right? You don't have to say, well, I'm going to wait for green, and then maybe I'll start playing it, right? If you have the conviction already, you want to fire here, right? If you have that conviction, and probably maybe leave a little room and hope it comes in a little bit, an extra day or so. Right, so I'm talking about ballpark, right? You don't want to get in the habit of exacts, ballpark. You know, and if it gets there, it's even that much better. Pray for me. That's a banks, huh? Hey, listen, you know, and that's something, right? You see all the time in the market. Everybody likes stuff when it's going up, right? But when it's not, and it starts to roll over, they don't like it anymore. You know, AMD, we were kidding around, right? It's on everybody's do not touch list. Now, you know, the whole talk of the town's AMD right now. You know, but the trick, see, when we're talking about swing trades, right? You want to give yourself enough time, right? Because that's the problem. It's not exacts. You know, you want to give yourself enough time and a chance to be right. When you're trying to pinpoint for swing trading in positions the exact day or week a move is going to happen, you know, you think you're Houdini, right? You think you're like, we don't have crystal balls. Nostradamus, Houdini. Who's Houdini? Houdini, what'd he do? A magician? So that applies to that. All right, so you want to be in the ballpark, right? So if you like the banks here, right? You had a little bounce here now. So, I mean, technically you're not in buy signal, but, you know, this neighborhood, let's say, you know, you want to buy and give yourself enough time to, you know, allow yourself a chance to see the turn. That's what we want to do. So let's look at quickly just a couple names from today, you know, just to get an idea, swing trade always, right? So I'll tell you my impression of some of the action. So like this here, okay, this was my favorite action of the day. All right, tech, underbelly, software name. It's been a great stock. I know the name off prior action, probably a couple of years now in the past. Has been absolute money. This is really nice size for this name. All right. We talk about this for like swing trade positions, Jan. All right. So this is not trading. You're not placing a trade off momentum or the market's going to be up over the next week or so. All right. Making a bet on the name. All right. Little pop in IV, clean. All right. Wood. All right. All the things we talked about where we want to pick from that pile for swing trading purposes. All right. Checks off all the boxes. All right. So for me, the issue is what we just went over. Okay, that's the only issue. The order itself is beautiful. I can't find anything wrong with it. Anything. Okay. But you have a really nice move off the lows into a little pink panther, for Christ's sake, right? Pink. And you know, we look at overall sentiment. All right, just going over all the things here. Okay, we just spoke about that. So we know swing trade winners are going to be more difficult at the least here. And then we look at the sector, okay, and even though it's underbelly, so it's not a major high beta name in the group, it's considered tech. So that's why, I couldn't get myself to buy it. Now, it may be up for the next couple days, right? But the problem is, and you see it now, okay, happening in other names. If you don't sell that pop, okay, when that breather comes, you got to sit through it, right? You got to sit through it. Maybe this player is starting a position here, for all we know. And he hopes, or she hopes, it consolidates and pulls so they can add. Right? Maybe they'll come back. Who knows? They could come back 3, 4 more times for all we know. That's the difference between us and them. If you're not willing to do that, right? In my opinion, you need to pay attention to these other things on the sentiment side, right? If it's going to bother you, if this thing trades higher, you got some profits and you don't take it, and then there's a wash, a sentiment wash, you can't buy it. You can't buy it. Because think about it. What you're hoping for is you're hoping you tail this quality Jan action with time, and you want the move to happen right now before the sentiment wash comes. You know what I mean? That's what you're hoping for. You want the cake, you need it too, as that saying goes. So you want to buy Jans, and you want this thing to go now through Pink Panther. All right, but if you want to approach it maybe the way they will, and start a position here, just in case it does, and if it doesn't, add when it consolidates wherever it does, you play it like that. But you can't let it bother you if this thing breathes. All right. Guys, even if this was at a quality spot, okay, even if it was here, all right, you still have that sentiment risk. The only difference is if it pops, right, possibly it doesn't have as much real estate to come down as it would here. And it could maybe hang out here through the rinse, and then with time head higher. But you still, based on overall sentiment where it's at, you still have that risk no matter where it is. No matter where it is. Well, as far as upside is concerned, it's probably sentiment. Downside, you have less downside risk at the spot. So in other words, the names that end up, when there's a sentiment rinse, the names that sell off and come in are the names that had big moves. And in reality, they come down, but they had a big move. They're not coming down much. Where if you're buying at the right spot, the likelihood is it hangs around there. You understand? So less downside risk with the spot, but sentiment risk is sentiment risk. Because if there's going to be a sell-off, right, to rinse sentiment, you can get lucky and find one of the few names that go up into that. But the odds are whatever stock you're playing is going to be heavy with the overall market, or consolidate with the overall market, right? Odds, probability. It may catch news and you get lucky, but you can't play for that. So ideally, for a name like this, what you want to see is you want to see it cool off, right? We want to see possibly sentiment rinse a bit. And, either you look for an entry there, or even better, they hit it again. But when the market sells off, and sentiment's not hot, right? In the overall market, it's not hot, but it's not bullish either. So like Lewis said, there's more opportunity for failure out there. That's all. Doesn't mean you can't cash a ticket. A lot of people cashing tickets out there. There's just going to be more losers as well. Think about you think about look at all the winners we've seen, off this move. It's been a lot of big winners, especially in growth. Huge. So odds are it's got to come from somewhere else for moves, right? So let's say tactically / intermediate term, if a decent move out of where we are now is more likely to be outside of tech in individual names. Right? And why do I say that? All right, what I want to do on the next course, what I want to do is, now that we've gone over this, I want to go, even though we can't apply it now, I feel it's really important for all of you to have, because that's where the big dent comes on your P&L from swing trading. The major intermediate term positioning and sentiment stuff we look at that nails major bottoms and lows. Again, unfortunately, in this market, it's been borderline useless because we haven't had a correction. But that's not going to stay like that forever, as much as it feels like it is right now, right? You know what I mean? And the reason why I think it's really important for you guys to get a grasp on it and to be ready when it does, because that's where our emotions F us up the most. That's where you really could get screwed up. And on the flip side, if you don't, that's where all the money's made, man. That's where all the money's made. I mean, that's where I made all my money. Because you could size up, you have the conviction. So in other words, what I'm talking about next week, Matt, we're going to go over the sentiment stuff, the intermediate term and positioning sentiment stuff that is not useful on a day-to-day, week-to-week basis. But the stuff that nails major lows. Yeah, Lewis. That's what I'm thinking too. You know what I mean? The COVID lows. Right? Like what we saw into the COVID lows, that even though we were pooping our bloomers, we knew we had to be bullish and look for opportunity into any selling. Oh God, I wish, you know what? Maybe you could hold a webinar on that and I'll attend. Listen, okay? And just, I'm being honest with you guys. I can lie, I can fake it, right? I'm not gonna do, I'm not that, you know, I don't do that. Okay. There's no hidden secret answer to that. All right. You can do stuff and try to mimic what the pros do because they don't even have an answer. All right. But it's easier said than done. Okay. And we see what the pros do on a daily basis. Ranchero is a big proponent of it, right? Roll. You want to catch the trend? Roll. But you got to understand what we talked about in this webinar earlier about not buying stuff, looking to buy stuff every day, buying early in the trend and holding. That's what it is. You understand? And that's what the pros do. So what you're looking to do is, right, boom, let's say bullish sentiment signals. Here's your sweet spot right here, right? All the action that comes in here. You buy a couple things, whatever pops, you got profits, roll them up and out. Let you survive that. You catch this, roll them up and out. And pay yourself along the way. And here, the pros, okay, and this is the crazy thing. They already know when this thing is over, when that trend comes to an end and rolls over, they are willing to get stuck. They are willing to get caught with what they have. You understand? They're willing to punt that final roll. But it allows them, like, let's say here, right? This is what we were talking about, pre-election, okay? Roll up, roll out, roll up, roll out, roll up, roll out, roll up, roll out. And then you're paying yourself along the way doing that. So your position's getting smaller, 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 smaller. And then when you get caught at the end, you know, you're a lot lighter than you were. But, you know, you're talking about exit strategies. That's a legitimate exit strategy that the pros will use. If you're talking about, I want to figure out a way to get out and not watch stocks continue to go higher when I get out. It's not going to happen. Or when I sell, when I don't sell, they keep going higher. Not going to happen. It's not going to happen. Okay. The only thing that's kept me sane, okay, the only thing that's kept me sane, because exits are my nemesis. My nemesis. Entries, I'm too disciplined. Exits, I hate selling. Hate it. Even for a profit, I hate selling. All right. But the only thing that has kept me sane is that when I put the trade on, I have an idea of what the hell I'm looking for. Okay. So what that means, if I'm going to swing a position off quality action at a quality spot, The reason I'm doing that with time is because I'm looking for decent upside, right? So those swing trades, I'm going to give a little leash to. I'm willing to give up the short-term profits, risk the short-term profits, because I'm in it for bigger. Trades, I sell them and I don't even blink. Listen, I complain and curse them out when they go up every day after I sell them, but I don't even blink. Like if I'm in a trade, if I made money, caught that initial pop, that's all I was looking for. The stock keeps going, I wasn't looking for that. You understand? It's not real to me because I wasn't even looking for that. So that's the only thing that's kept me sane, is my trades are trades, and my positions, I'm willing to risk that short-term profit for more. Okay, I'll give you an example. Trip. Okay. If this was a trade, no doubt about it, I would have got out. I'm not even bullshitting. I would have got out without a blink of the eye if it was a trade. But because it has a little time and I was willing to give up short-term profits for the larger reward, I'm sitting through this shit. So it doesn't bother me. You understand? It doesn't bother me. Either way. If it ends up being a loser, I'm not going to complain that I didn't sell this rip because it wasn't a trade. You understand? Where all the other shit, I'm playing equity and I'm selling like mad, they're all trades, I mean, 90% of them are going parabolic, but I wasn't looking for big moves. Otherwise, you're going to drive yourself nuts. So when I'm playing for a trade, I'm selling this initial rip. That's it. And the stuff I'm looking for more of a move, I'm willing to risk this. If it ends up backfiring, it backfires. I mean, that's the game. Those are the two type of trades, in my opinion. Or sweeper activity anyway. You're either looking for this over a short amount of time, or you're willing to sit through some agita stress because you're looking to get paid. Right? And we see it, all the time, right? We see it all the time. This action, same thing. You could have traded it, okay? But if it was a swing for that larger reward, you would have sat through this for that larger reward. Right? So that's what I mean. What you're going to realize, right? A lot of the top action that we look at each day at decent spots, you get this. You get this. You understand? You'll have a trade. Okay? This, obviously, there's more risk. See, but what a lot of, especially retail, newer retail, they want all the time, they want this all the time, right? They want this. All right away. Doesn't work like that. You'll get it sometimes. sometimes you'll get it. MGNI, that's another good example. Look, right? You couldn't have a trade at MGNI. You weren't up on MGNI off the action. All right. Why is my chart? Oh, because of that thing. You know what I mean? There's always going to be the momentum of the stronger flow. There's always going to be momentum to trade. You know, always. Always. On all these things, they end up tattooing, you know, some go crazier than others. Right? Wish it was more than a trade. But if you're looking for more, you risk giving back that trade. That's the difference, in my opinion. So it can't bother you. I mean, otherwise we could complain about everything. You know, if you got in Roku because there was short dated calls they were playing, right? And you sold this rip, you did what you were supposed to do. Forget this shit. This is make believe to you. Right? Like, we complain about it, but you weren't looking for this. If you got in here off the action, you get bink, bink. I mean, if you're looking for more than that on short-term trades, you're nuts. You know? But the nice action, the good action at quality spots, you get that cushion a lot of times. You're going to get that cushion. You know what I mean? You get that cushion because the buying is aggressive and it creates momentum. You know, after that, it depends on a lot of other things. But you'll see with all the action, all the top action. I'm not talking about one sweep and you don't see them again. You know, all the top aggressive action, you get a cushion. All right. So next week, that's what we're going to do. We're going to look at what's the label I want to put on it? The stronger positioning stuff, sentiment stuff. Bigger picture stuff. All right. And why it's important, why it works, what does it tell us, and all that stuff. All right. So this way, everybody's ready when the Fed decides to blow shit up. Anybody have any questions? To news to see why it's moving, or no, like CDNS, I don't need to know any news or anything with that action. You know what I mean? The action caught my eye, but again, the reason why, even though the action wasn't, even though the action was impressive, the reason why I didn't play it was because of the reasons we went over. So in other words, if that CDNS buying came in 2 weeks ago, when they started to light these things up, I would have definitely bought it. I would have definitely played it. About what led you to go all in care? Before COVID. Yeah, we'll look. That's what we're going to go over next week. That's what we're going to go over next week. All right, major sentiment signals, and not just major sentiment signals in regards to the market, even what we're seeing right now. What lit this growth trade on fire, right? And what to look for another setup like that, maybe even the other way. Good to hear, Petra. Thank you. Did I miss anybody's question? Hold on, let me scroll up here. Nobody's saying sometimes I have something 6 months down the road, 3 weeks later has a decent move up. That's the thing, Noreen. So, and I remember you talking about this. So Noreen's talking about what I just went over, basically. Okay, you have to decide. You have to have an idea of what you're looking for before you put that trade on, or when you put that trade on. Okay, so like I said, if it's a swing trade with time, if you got a move that you were looking for, it's fine taking profits, right? If you think you're going to see a little bit more, maybe you want to roll, okay? Maybe sentiment is red hot and you want to take those profits off the table, even though you think there's a little more there. You understand? So there's no problem with that. But what basically you're telling yourself is you're willing to risk whatever profits you have for more. That's what you're doing in options, because those profits can disappear like that. Did you hear that? Like that. So when you're deciding to hold or you're looking to sell, that's the question you're asking yourself. Am I okay with giving back what I'm up to see more? If you're not, then you're yanking it. You understand? But you got to understand, that's ultimately what you're deciding when you place a bet with time or a trade. A trade, you're willing to take what the market's going to give you over the short term. Okay? A position with time, you're looking for that larger upside move. So if you happen to see that larger upside move in a shorter time frame, you take it. If you know that's what you were looking for, or close to what you were looking for, because you got to understand, options, the longer you hold them, the more risky they are. You know, a stock could do nothing and you lose money. So that's why when you have a trade, okay, you have to take those profits off the table. Because one reversal, one day. Yeah, and you know, let's say, I'm trying to think, like let's say the growth move here, right? Let's say you bought this Roku, right? Down here with time, okay? With time. Because you're seeing action, and what you're betting on with time is a rotation back into growth for a major trend reversal. Okay? Then you wouldn't be looking to just sell the quick up 2-3 days, because you bought those calls with time looking for that larger move. All right. If you're on the fence, roll. You know what I mean? Take some money off the table and roll. If you're in between. But for me, when it comes to options, that's generally what it comes down to, that you got to understand. Are you willing to risk those profits that you have? That's ultimately what it comes down to. Don't let anybody else tell you different. Are you okay with that? If you're up, if you bought Tesla calls, right, and you're up 50% on them, but you have time and you were looking for at least a double, then you're not selling them. Otherwise you would have just looked to trade it. You know what I mean? Yeah, but there's no secret sauce. Trust me, believe me. I've been in this game long enough, around so many people, and everybody's in the same boat. Everybody's in the same boat. We all feel like stocks we sell, they keep going. Stocks we don't sell, we give back profits. It eventually evens out a bit. I wouldn't even say completely, but it does even out. But you got to allow it to even out. You understand? If you, let's say you bought Tesla gems, right? And you decided to hold them instead of taking the profit off the table, and you gave back that money, right? And now every single stock you play from that point on, you're taking quick rips, then you're not giving it a chance to even out. You understand? That stuff, all that stuff evens out. So trades are trades. You're looking at the market, whatever the market's willing to give you over the extreme short term, you're looking to take. And then the swing positions, you're looking for, like for me, the swing positions, I'm looking, a lot of them, most of them, if not all, I let go to zero. So I have to look for more than just a trade. You understand? Otherwise, my risk reward is a disaster. Right? So I have no choice. Yeah. I mean, the beauty of options, Fish, is managing your risk. It allows you to manage your risk. I mean, think about it, right? If you're in equity and this market really takes a poop, you can get hit over the head. So you can manage your risk. That's the beauty of options. Like I said, options to me, I didn't know anybody who had tight stop losses or anything like that in options. It just couldn't be done. At best, like I knew people who, all right, 50% stop loss. So if it loses half its value, I'm out. Something wide like that. But I think the benefit to options, you only can lose what you put in. You understand? That's the beauty of options. That's the beauty of options. So, but for trading purposes, in the money calls, I guess you could try to put stops on them. You got to stay a little bit looser and stay with more liquid names. That's the problem too. These spreads kill you. They destroy you. You have December AMD 100 calls. I'm up 128%. Going to close them out tomorrow because they might be a pre-work soon. August is a slumber. I mean, you're up 128%. You know what I mean? No one's going to complain about that. Right? Like, you cashed the ticket. You cashed your ticket there, man. There's nothing wrong with that. Nothing wrong with that. Nice job, too, by the way. Yeah, you could always, exactly, roll up a piece, leave some exposure. You know what I mean? But, and the other thing, too, again, this market's a little trickier, and then we'll wrap it up. But, you know, for me, and I still have trouble holding, don't get me wrong, but the stuff I found myself more comfortable holding is the first batch of moves. You know what I mean? So like he played AMD, maybe he played it earlier, 2 weeks ago, right? When this whole rotation started. Like that's where you let the leash, you leave the leash loose if you want to. You know, if you wanted to. You know, now, I mean, look what's going on here, right? Look. And now, in my opinion, in these things, it's not the time to let the leash move loose. Yeah, AMD was nuts. AMD was a beauty. A beauty. You know, it has a tendency of doing this too, right? Goes into this disaster consolidation of chop. And then, you know, big move and some more chop, right? It's got a reputation for that. All the move happens right here. But, you know, and that's why we talk about spots, guys, like, you know, but, and the thing is the time, right? Like even AMD, okay, even if you bought here, you know what I mean? Or even, let's say, here, right? If you had the time, you know, you got a good shot of catching that move when it turns. But you need it, you know, you got to have the time. You know, but that's why I like looking, you know, towards the end of that consolidation. You know, when they catch action, because you got a shot to catch that break out of it, where everybody else wants to hop in now, right? They weren't even looking at it. It was on their do not touch list. All right, ladies and gents. All right, so next week, we'll talk about all the big picture stuff. And, you know, one thing that will be useful, you know, trend changes, rotation like we just saw into growth. You know, what we're seeing now we'll look at and what to keep an eye on, you know, in the future. So you guys know what to look at. Thanks, guys. I'll see you guys mañana. Have a good night.